I think this this cartoon sort of will encapsulate the two parts of looking at trends. One is either a bull market, or two, it is a bear market. In a bull market, the prices are rising. In a bear market, the prices are dropping. Now, there is one that is missing here. The market does three things, really. There are two here. Either the prices are rising, or the prices are flat or going sideways, or finally, third, the prices are going down. So the market will always do just three things. It's either going up, going down, or moving sideways. So if you always remember that at any point, there are three things that the market will do: going up in a bull market, going down in a bear market, or just going sideways. Now we look at the strategy we're looking at is follow the trend. We will try to see how do we identify trends. So what are we trying to achieve here? We will try to learn how to determine the trend of a currency pair, and then we'll try to learn how to time entries into a trade in that direction. So in a sense, there are two things there: to determine the trend, and then the second one is how to time entries into a trade in that direction. Now I'll say to you, just follow the trend. Don't predict. Most people, or many people, try to predict the market. There's no real need to want to predict the market. The simple fact is that we don't know what is going to happen tomorrow, talk less of next year or the next 2 years or 3 years. That is not what we are trying to do in this with this particular case approach. All we're going to do is to try to react to the market. So in a sense, don't predict, just follow. We're not looking at crystal balls to predict the future. Nobody can tell you exactly where the market is going. If anybody tells you that they can tell you exactly where the market is, don't believe it. All you need to do is look at the arguments in front of you in terms of the chart, and then react or follow the chart or the trend that is developing, or once there's a momentum in that direction. That is really what we are trying to achieve in this trend following approach. So don't try to predict what will happen, react to what is happening. Trend following, the trend shows us exactly what is happening. Like, if you remember the fundamental, when we're looking at the theoretical underpinning of this, everything is priced into the market. So in a sense, the price is a reflection, is some total of all the participants in that particular market. So, and everything is already priced in. So all you need to do is to see what the trend then is, or where it is heading. And we have discussed that the market will only do three things. It's either it's going up, it is going down, or it will go sideways. It will do just one of those three things. So you just react or follow the trend. Now, this is a very clear downtrend. The market is going down. But one of the things, I mean, I'd like people to know, the market never goes down in a straight line. And that is what most people tend to miss. It never goes down in a straight line. It is going down, certainly, but then it sort of rises and falls in its approach, or in its downwards directional fall. So it's always bubbling and dancing as it goes all down. But you can see, if you look at over a long term, you see that the price or the trend is downwards. This is what we call a bear market. The prices are falling.